Hello smart money traders, welcome back to the channel. I want to show you something very powerful in this video. It is a kind of an entry strategy I used to do when I started trading ICT concept, and I know after watching this video a lot of you guys will find an aha moment that will transform the way you look at the market and the way you take trades whenever you're trading with the ICT concept. It is called order block in an order block strategy. It is basically a kind of an order block entry strategy that will transform the way you take trade every time you're trading with the ICT concept. So let's get into this video. I'm not going to take long time explaining this. These are the things you need to know before you can practically use this simple concept. The first thing to know is to have a basic understanding of what is an order flow. Order flow in simple terms simply means where the directional bias is, that is where the money is going. Okay, from look of things, when you look at your chart from here, now you have to start from the higher time frame down to the lower time frame. What I do, since I normally trade intraday, what I do is to go to the daily time frame. This is the daily time frame, and just have a look of what is happening. From the look of things, you can actually see that you are in a massive bearish market. Okay, this is what you can extract from this information. I will now go down to the 4-hour time frame. Okay, and this becomes my time frame of interest because it gives me a lot of information I can extract from here. So look at this. I'm looking at what is happening from here to here, and you can actually see that we are still in a bearish movement. Break of structure, break of structure, break of structure up to this level. So let me show you how this strategy works in this simple, chart pattern here that we have. Let me bring this closer. Now you will find an order block in a downward movement like this. You're going to find a bearish order block because you are in a bearish market. So let me just give you an example with this particular order block. This place, this is a bearish order block. If you are trading with order block, you will know that normally what you do is to mark your order block and then enter your trade right at this point. When price retraces back to that place, you want to enter trade and you target somewhere around here. This is how people trade with an order block. Let me show you in this representation. After this break of structure right here, break of structure right here, which you can visibly see, break of structure, you have an order block right up here. You want to enter trade from there, and you will just watch out for price to do exactly what you are expecting it to do, and you are in the market. Okay, and then it reaches your target. Okay, so I want to show you a different perspective of entering this that will give you a minimum risk, and then you're going to have the maximum profit that you could get in this kind of entry. I have shared so many entry concepts even in this particular video on my YouTube channel. If you come over here, you're going to see this particular video. I've made top ICT entry models that are going to be very helpful to you. So I'm going to mix up everything between those ICT entry models and then this kind of entry. So look at this. If you have this market play out like that, after break of structure, after you've marked out your higher time frame order block, this is your point of interest from the higher time frame. Now look at this. This is 4-hour time frame. You can drop to a time frame lower or even 2 time frame lower. If you can't find what I'm showing you in 2 time frame lower, you can go to 3 time frame lower from the 4-hour. So from 4-hour, the next time frame that is of interest to us is 1-hour time frame. Okay, we can click on it and then look at what will happen. Now in this point of interest from higher time frame, we're going to wait for a shift in market structure that will align with our entry. Look at this. Remember, our 4-hour order flow is bearish. The retracement is bullish until we see a shift in market structure. Shift in market structure simply means we have something like this. We are in an uptrend, and then we have a trade taking out the last high that price actually pushed. Okay, so when we see this, it means we have shift market direction from an uptrend to a downtrend. I have explained this in detail in my video. You can find this video about correct ICT structure marking. It can help you a lot. So this is a shift in market structure. So in this kind of situation, we're going to wait for price to come back to an order block. We'll look for an order block in the lower time frame right here. An order block here. So this is what we call an order block in an order block strategy. I'm going to show you practically. I'm just giving you these sketches so that you can have an idea of what is happening. So let's have it practically right here. If we play out this, we want to watch for shift in market structure to happen while it is playing out. Okay, this is it, guys. Shift in market structure. As price comes to our order block of interest, we will not enter from that higher time frame, which is the 4-hour time frame right here, and take our trade. Look at what I'm saying. If you entered from here, right here, look at your stop loss. From here to here, very big stop loss. From here to here is almost 26 pips. So how do we minimize this? Is by doing this kind of entry I'm about to show you. If we go down to the 1-hour time frame now, okay, the 1-hour time frame still in view, we're going to see what I'm telling you right here. So after this shifting market structure comes in, let me show you where the shifting market structure happened right here. Shifting market structure happened right at this point, and we call it change of character, as other people will call it change of character. At this point, it happened right at this point because this is the last higher low that price has printed, push up, crashing into it. So this is where our shifting market structure happened right here. So we have an alignment just like this, our sketch. We have this complete shifting market structure at this point, and then right at this point too, we have a shifting market structure. That means we have an alignment, a bearish higher time frame and a bearish lower time frame. So this is where the order block in an order block concept comes in handy. So we will look out for an order block. This is an order block in the lower time frame. So this is our interest now. Let me change the color to something visible so everyone can see. Do I go for red? Yes, let's use red. So this is it. So what we're going to do is, this is going to be our entry now, not from that higher time frame. So this is our entry. We have found an order block inside an order block. So we will enter from there, and our entry is right at the tip of this order block. Our stop loss now is just above this order block. Okay, now look at our stop loss from here to here, from almost 30 pips to 9 pips stop loss. Do you now see the difference and the importance of this kind of entry? And your target is absolutely just at this liquidity. Okay, so if you play it out now, you're going to see, can you see you're already in the market now? You're already in the market. This is an order block from higher time frame, and then we have a small order block in the lower time frame, and this is why I call it an order block in an order block entry strategy. It gives you the highest, probability trade, and then it gives you the chances of getting the best kind of entry with the less risk exposure, as you can see right here happening. So this is where the concept of order block in an order block comes in handy. Okay, I taught this strategy some few years back, and it's still working for me, and I use it almost every day. Okay, so understanding market structure, time frame, and order block is the most important things you will know for this strategy to work for you. Let me just show you another example quickly, and then I will close this because this is explanatory enough. It's called an order block in an order block strategy. Okay, still on this order flow, let's see if there is an order block we can make an example with. Okay, I can call this an order block, guys. This guy, to me, this is an order block. Okay, price actually came back to retest it. So Let's look at it from that perspective. So our entry is going to be right here at the tip of the order block right here, and our stop loss is right above here. Our target is somewhere just here. Okay, let's check the number of pips we're risking. 15 pips for our risks. Okay, so combining this with our lower time frame entry, remember 2 time frame rules, we go back to the 1 hour and watch for the rhythm of the market to play out. So we're going to watch it. So we are watching it. We want to have a shift in market structure. Is this a shift in market structure? No, we are watching it. Let's see a visible shift. Okay, this is a shift in market structure for me right here. This place, as noisy as it may be, this place is a shift in market structure for me, guys. This place, and I'm seeing an order block right here. This place, once I saw that push down here lower than this relative equal lows, even though it sounds somehow noisy, but you can still see it. This is my shift in market structure. Okay, this is my shift in market structure at this point. And let me take out this data, this one, this particular data. This is now my order block in an order block. Okay, order block that comes in after that order block. Now, some people can call this a shift in market structure, but I want to see a complete turnaround so I can take trade without risks. That is the advantage of it. So if I'm entering from here, from this order block, as price will come back to take me in, my stop loss is right above here. And if I measure my stop loss from here to here, as opposed to 15 pips, I'm risking just 8 pips. Okay, so this is the advantage of this kind of entry. I found an order block after this higher time frame order block. It touches it, comes back, and I'm in the market. You can actually see that trade took me in, and you're going to actually see the beauty of this kind of entry. My target is this place, this particular place. This place is my target. Okay, so you're going to see this happen time and again as you learn to take trade with this kind of concept. As noisy as this kind of movement is, sometimes this is the price of trading. You have to stay through all these noisy movements. You have to stay through them and see how they behave, and then at the end of the day, they move in your direction. Okay, so this is the basics of trading with an order block in an order block trade entry strategy. You can try it, guys. Look for an order block and look for where this kind of entry comes in handy, so you can have the best of your trade available for you whenever you come to trade in the forex market. So I think I'm going to be stopping right here. I don't have anything to show you again regarding this strategy. You can learn it and practice it. I've said a lot already that will be really, really helpful to you. If you have any question, guys, let me know in the comments. Thank you guys for watching. See you in another video.